And now with the latest business and market news, here's Jayne Edwards.
Thanks, Alan. After a week of up and down trade, Wall Street got spooked on Friday, sending the major indices plummeting and giving us a negative lead-in for our own market tomorrow. The Dow fell by nearly 3%, fuelled by an unexpectedly sharp fall in consumer sentiment, a gloomy outlook from the Federal Reserve and some indifferent results from major companies. A slew of US economic news has investors worried. Consumer sentiment slid by 10 points. Inflation was down for the third month in a row and wholesale prices dropped, leading to concerns about deflation. All of this came after the minutes of the US Federal Reserve gave a lukewarm assessment of the economic recovery and suggested it could be years before it's complete. In company news, General Electric, Bank of America and Citigroup all disappointed investors by reporting that although quarterly profits are up, there's been a drop in revenues. Around the world, share markets were mixed this week. The US fell by 1% overall, while the UK and Australian markets registered muted rises. With more on local shares, here's Marcus Padley.
The market fell 16.8% from the top in April, then bounced 6.76% in 6 days, although it didn't add up to much this week. The government's downgraded their GDP forecast, although it has to be said government GDP forecasts are hardly what we would call hard data. A bit of a shabby week for the resources sector after Chinese industrial production and GDP numbers came in a little bit below expectations, and also on the news that Chinese demand for copper had fallen in the last month, and iron ore stocks in particular took a bit of a beating after the Baltic Dry Index had its 35th consecutive fall on expectations that iron ore imports for China are going to drop this year for the first time since 1998. Plenty of quarterly production numbers from resources stocks this week. We saw Fortescue, Rio and ERA fall on the back of theirs. Western Areas and Oz Minerals was up on the back of theirs. We also saw Riversdale Mining announce a $337 million capital raising. Alumina was down despite some fairly good results from their joint venture partner in the US, Alcoa. And at the end of the week, Cougar Energy got nailed after the Queensland government closed down one of their underground gas projects for contaminating bore water with cancer-causing chemicals. In the industrials, we saw the Dulux Group split off from Orica, and it listed at $2.50 and closed the week out just above that level. We also saw New Farm smashed on the back of a profits warning. APN News and Media up after their CEO resigned. Downer EDI was up on press talk of a breakup bid for the company. And Intoll, which is the old Macquarie Infrastructure Group, flew this week after a $3.47 billion bid for the company from a Canadian pension fund. Out of the 33 IPOs we've had this year so far, 7 are currently up, 3 are flat, and I'm afraid 22 are down. A winner of the week this week was Geodynamics, up 58% after making some progress with their hot rock technology. And loser of the week was Indophil Resources, out of a long trading halt with the news that their Chinese bidder had pulled out.